How's it going, everyone? If you have ever struggled with holding trades longer or identifying when to stay in a trend, then this video is for you. Today we are diving into trading continuations and what that entails, how to spot them, how to confirm them, and most importantly, how to take profit from them. So I'll break down key signals that institutions use, how liquidity plays into continuation setups, and I'll also share with you real chart examples to show you how we bring all of these together. We're going to show you where to look for continuations, how to spot continuations, and then, like I mentioned, a full guide on where to place your take profit and your stop loss. So make sure to hit that like button, subscribe if you haven't already, and let's jump right in. So where do we look for continuations? We look for continuations at a swing point, a swing high, or a swing low. If you do not know what a swing high or swing low is, it is a 3-candle pattern where the middle wick is the highest wick between the three, or the middle wick is the lowest wick between the three. I will show you more when we move over to a real chart example. But what I want you to do is go to your higher time frame. That can be the daily, weekly, 4-hour, can be the monthly, and I want you to mark out all of the swing points you see on price action. And so remember, reversals occur at highs and lows. So if we trade above a range, we can anticipate prices to go back. If we trade below a range, we can anticipate a reversal back into the range. And I know what you're thinking, this video isn't about reversals, and you are right. This video is about continuation. So what are we doing? We are waiting for the reversal to take place and then trading a continuation based on that reversal. So where can we wait for continuations to happen? We can wait for continuations to happen at swing highs and lows, like I mentioned on the previous clip, or we can wait for continuations to happen at a fair value gap. This is a textbook internal to external range play where we have a fair value gap. If you do not know what a fair value gap is, it is a 3-candle pattern where the wick, the low of the third candle does not touch the high of the first candle, or in the same way in the bearish scenario, we have our first candle, the low of the first candle does not touch the high of the third candle. And so how do we frame continuations out of a fair value gap? Well, if the market is in an uptrend, we look for bullish fair value gaps to get respected. So if we retrace back into this fair value gap, we can take a continuation trade with the trend to hit this external liquidity. In the same way, in a bearish scenario, if the market is trending down, we want bearish fair value gaps to get respected. Now, if we retrace back into a bearish fair value gap, we can look for external range liquidity to get taken. It is a textbook internal to external play, where the previous slide was an external grabbing liquidity back to an internal play. So now that you know that we wait for continuation setups to happen and occur at swing highs and lows and at fair value gaps, how do we actually get on side of the market? Now here in this example, I've marked out higher time frame fair value gaps, and we can see this price action is busy trading down lower into the fair value gap. Now a reversal play would be to wait for the change in the state of delivery. If you do not know what a change in the state of delivery is, it is just the formation of an order block. Remember, an order block forms when we close above it. So an order block will be the series or singular down close candle that took out this liquidity and fair value gap. As soon as we close above that single or series of down close candles, we have our change in the state of delivery. In a bearish scenario, we have up close candles, singular or series of up close candles that took out liquidity. As soon as we close below it, that is the formation of our bearish order block or a bearish change in the state of delivery. It is very important to pair this concept with higher time frame PD arrays like swing highs and lows or fair value gaps. Now again, this is a reversal concept. Now how do we actually take a continuation setup out of a change in the state of delivery? And here we have the secret sauce. This is how we take a continuation play out of a change in the state of delivery. We wait for a propulsion block to form. So what is a propulsion block? Remember in the previous slide, I showed you our change in the state of delivery, which is as soon as we close above the series of down close candles that took out this low, when we close above it, that becomes my change in the state of delivery. In a bearish scenario, when we close below the series of up close candles that took out liquidity, as soon as we close below that, that becomes my bearish change in the state of delivery. So what is a propulsion block? A propulsion block is when we form an order block out of an order block. So if we look at this scenario, where is our initial order block? Our initial order block is here. Do you agree? Because we sweep below, we close above these series of down close candles, so this becomes my initial order block. Now, price action retraces back into that order block, and what happens now? We close above this series or singular down close candle, and this forms my propulsion block. That is a propulsion block. Now, in a bearish scenario, here we have price trending up, we sweep a high, we close below the series of up close candles that took out the high, and that forms my initial change in the state of delivery. It forms my initial order block. So where is my propulsion block? As soon as we trade back into that order block and we close below the series of up close candles that took out this order block. So you drag your order block across, you wait for price action to trade back into it, and then close below the series of up close candles that traded back into that order block. That is the formation of my propulsion block. Remember, a propulsion block is just an order block out of an order block. So how do we actually get on side with this? We can take a trade as soon as we close above these down close candles, stop loss at the propulsion block low, and we can target a 2R, or we can wait for a retest of the propulsion block, enter on the retest, stop at the low, and target a 2R. In the same way, in the bearish scenario, we can take a trade as soon as we close below the series of up close candles that traded back into my initial order block. As soon as we close below those down close candles, up close candles, we can take a market execution. Stops at the high of the propulsion block, and we target a 2R. Or we can wait for price action to retest our propulsion block, take a trade, and get a limit orders entry. So we can drag our propulsion block across, wait for the market to trade back to our propulsion block, get on side with this trade, and then we can take a 2R. Let me show you how all of this works together on a live market. If you're looking to trade live with me, a full-time professional trader that has more than a decade of market experience, go ahead and check out the mentorship program below, linked in the description. This is so much more than just a course. It is a complete mentorship guide where I hold your hand and I show you exactly step by step how I break the markets down and exactly how I take trades. You will also have access to my live trading room where you can see how I execute on a live basis. And I also share my daily trades with you. So if you're interested in trading alongside me and having me increase your skill of a trader, check out the link in my description below. So in this example, we are on gold on the daily time frame. And remember I said we wait for continuations and that entire setup to happen at highs and lows. And so what is a swing high? If we look at the market, we can see that we have a standalone wick. The wick to the left and the wick to the right is lower than the middle wick. That is a swing high. Here we have another swing high, and here we have another swing high. And so what I want you to do is I want you to mark out the swing highs and the swing lows. Here we have a swing low. We can see the wick to the left and the wick to the right does not touch this middle wick. And so that is our swing low. So what do we do now? Now we wait for the market to trade through either side of it. So we can play this ahead and we can see that we have tapped this swing high. So that is where we drop to our 1 hour time frame. Remember the time frame alignment. From the daily, we go to the 1 hour. From the weekly, we go to the 4 hour. From the 4 hour, we go to the 15 minute. And so dropping to our 1 hour time frame, what do we look for now? So let me just mark this out properly and we can see here we have that swing high that was taken. I'm just going to mark that as our liquidity point. So here we have that liquidity taken. Where is our order block? Do you see the single or series of up close candles that took out liquidity? It is this green candle here. So as soon as we close below that green candle, that is my initial change in the state of delivery. And what happens now? Now we can see this market trades back into it, and we'll have to look for a reaction now. So now we wait for the market to close below the series of singular up close candle that traded into our order block. And so here we can see we have a bullish candle, a doji, and then we have 4 bullish candles. These 4 bullish candles, as soon as we close below that, that becomes my propulsion block, because it is an order block that forms out of an order block. And so here you have 2 different options. Here you can either take a market execution, a market entry. As soon as your propulsion block forms, stop loss goes above the high of the propulsion block, and you can target a 2R. Or your second option is you can wait for a retest of that propulsion block. Stops go at the high, and you can target a 2R. And so both would have, let's see how both plays out. So now we can let this market play forward, and what happens. Here we can see we trade back, we retest the propulsion block. So if I drag that along, we can see we would have had that retest. So you would have had a winning trade on both examples. One thing to note is price action doesn't always come back to retest the propulsion block. So if you are scared you're going to miss trades, it's better to take a market execution as soon as that propulsion block gets formed. So just removing the position tools, we can see our propulsion block would have been these up close candles. That is my propulsion block. It is an order block that forms out of an order block. And so what happens now? Now we can see here we have that swing low, and so we go back to the daily time frame. Looking at my daily time frame, we sweep a swing low. Here we have a swing low. So I'm just going to mark out all of the swing lows. Here we have another swing low, and here we have another swing low. So now we wait for the market just to trade through a swing low. Here we can see we run these swings, and so let's drop to the 1 hour time frame again to see how we can have taken advantage of this liquidity raid. Dropping to that 1 hour time frame, I'm just going to delete the 2 swings because we have taken out this bottom swing. There's no need to leave these swings on the chart. So I'm just keeping it nice and clean. And so here we can see we raid that swing low. So I'm going to mark that as liquidity again. Here we have my liquidity. And if I zoom in, where is my order block? This order block hasn't been formed yet because we need to close above the series of down close candles that took out liquidity and made this low. So as soon as we close above the series of down close candles, that is my initial order block. So let's see how that plays out. Immediately we close above, forming this order block. So what are we waiting for now? Now we're waiting for the market to retest the order block and then close above this move. That will become my propulsion block. So let's see how that plays out. I'm just waiting for the market to retest my order block. Remember, it has to touch the order block. And so what do we see now? Now we can see we have 2 candles trading into my order block. So as soon as we close above these 2 candles, that would be my propulsion block. So let's wait for that to happen. Doesn't happen, we trade lower. Let's see. Have we closed above it? No. Have we taken out this low? Yes. If you look here, we can see we have swept this low. So our propulsion block moves lower. Just going to zoom in to show you and explain. Because we have taken out this low, we have one single down close candle that ran the low. So our propulsion block moves to the opening price of this bearish candle because we have this little turtle soup. So as soon as we close above this black down close candle, that becomes my new propulsion block. So again, you can take a market execution, stop loss goes below the propulsion block, and you can target your first target at 2R, or you can take a retest and let that thing run. So let's see how this plays out. We get that retest. So if you took a limit order, you would have been entered into your trade. I like taking market executions, and let's see how this plays out. And there you go, we have hit 2R. So now you have secured partials and you have moved your stop to break even. So now let's see where we can take long-term targets. Are we in a market maker sell model? Yes, we are. Here we have our initial consolidation. Here we have accumulation 1, accumulation 2 into our smart money reversal. So now we can take targets at this high, and ultimately at this high. So let's see how that plays out. I'm going to drag that along as my draw on liquidity. Here we have another draw on liquidity at this swing high. And so let's see how this market behaves. Playing price forward. Here we go, and we are at a live market. We have hit our second TP for a 4.84 to 1 R. And so this is how you can use propulsion blocks in your trading. Here we have our second example. This is going to be a bullish example on NQ. We're starting on the daily time frame. Remember what I want you to do. I want you to mark out your swing highs and swing lows. And so here we can see we have the swing low here, and we have a swing high here. We also have a very tiny swing low here, but that is internal. And so now we just wait for the price to go and take out either side. We take out swing low, so I'm going to delete this swing low because we have this swing low on our chart. And now what do? Now we drop to the 1 hour time frame. Here we are on the 1 hour time frame. I'm just going to clean this up, move that along, and mark that as my liquidity. So what are we waiting for now? Now we are waiting for an order block to form. We're waiting for our initial change in the state of delivery. Here we have 1, 2, 3, 4 down close candles. So as soon as we close above them, that would be my initial change in the state of delivery. Let's see what happens. We trade lower. So as soon as we close below these down close candles, that would be my order block. What happens? We trade lower. So as soon as we close above these 3 down close candles, that would be my initial order block. So let's see if we get that. We haven't gotten that yet. If I zoom in, we can see we have closed above it. So our initial order block has been formed. So now we're waiting for price action to pull back into this order block. So I'm going to mark that out. That is my order block. I'm waiting for the market to trade back into this zone. So let's wait for that to happen. Here we see we tap that zone, drag that along. So now what do we want? Now we want a closure above these series of down close candles. That would be my propulsion block. So let's see if we get that. We play this market along. We don't get that. Instead, we sweep out the low. So as soon as we close below this up down close candle, that would be my propulsion block. And so now we just wait for the market to go ahead and do that, exactly what we want. So let's see how this plays out. Taking it candle for candle, dragging this along. Do we close above? Yes, we do close above. And so our propulsion block has just been formed. So again, now you can take your entry because we have formed the propulsion block. Stop loss goes below the low of the propulsion block, and we target initial targets are 2R. Let's see how this plays out. And immediately we run up. Do we hit TP? Yes, we do hit TP. And now we can look for where can we take long-term targets. We've already taken targets at these failure swings. So my next potential take profit will be at this swing. Let's see if we get to that swing high. Do we get there? Not yet. And there we go. We take out that swing high. Let's see if we take out this swing. And we do in fact take out that swing for an almost 4R take profit. And so here you can see again, this is how we trade continuation. This is how we make it easy. And the reason why I want you to do this instead of doing the normal ICT 2022 model is where you just get a liquidity sweep, a market structure shift, and you take your entry on a retest, is because this can just melt through and hit your stop loss. Where if you wait for the propulsion block to form, that is a little bit more higher probability, and then you can trade that continuation. Guys, I hope you enjoyed today's video. I hope you learned something new. As always, if you did, leave a like, leave a comment. I do reply to every single comment out there, and I will see you in the next video.